down.
Mhm.
So let me give you an example here now. If you buy the break of this daily candle
Mhm.
without waiting for the retest, right?
Mhm.
Let's say you buy the first break.
Right.
You being drawdown from 682. No, okay, you being profit. No. Okay, you being profit from 682 to 647. So 682, 82 minus 47. Depending on your take profit.
Mhm.
80 to 82, sorry. 82 minus 47.
Yeah, that's 35 points.
That's 35 points. So if your take profit is anywhere between 15, 20, 25 points,
You're in
you'll be
trouble.
you'll be good on this trade.
Mhm.
So it's gonna come one time and then you're gonna hit take profit
Mhm.
in about 2 minutes.
Right.
But if you're looking for like 40, 50 points,
Mhm.
you're gonna be in profit for 35 points, and then you're gonna go to almost break even right here
Mhm.
before markets now. So the reason why I wait for a retest is most times if you are in a short right here
Mhm.
and the market gives you 35 points, by the time the markets keep getting into your profits,
Mhm.
then your sense of analysis started getting messed up.
Mhm.
You'll be like, oh, I think they're gonna stop me out. They're gonna stop me out. They're gonna stop me out. So what people do is, as the market goes down, they move their stop. When they see it coming back up, they move their stop into maybe 5 points or 10 points.
Right. And you're
And
just
then by the time market gets here, they get stopped out. We have a retest, and then the market go all the way down. Like, oh, I took 10 points, and then the market went up 100 points.
right.
So I would rather leave the first break,
Mhm.
come for a retest. Once I get in my trade, you can see the market never came back to my entry.
Right.
So I used to do the first break.
Mhm.
But when I saw that sometimes I take a little bit and then the market end up giving more, then I now wait on the second break. If it doesn't give me the second break, so oh well, I'm trying to deal with that.
Sure.
You know, it doesn't fit my thesis. I don't mind. I'll come back and wait at the next level.
Now, are you typically trading? I think you said 9:30 to 11 Eastern.
Yes,
Okay. So just
yes.
that first hour and a half.
Yeah, like right now, I'm done with the trade. The
Yeah.
only reason I can still be trading right now is this trade right here.
Mhm.
If I'm in a trade where the market made a huge sell
Mhm.
and then they got to they make a rebound, the
Mhm.
market is showing strength,
Mhm.
I just leave it. See,
Mhm.
right now we're at pre-mid, right?
Right.
I could take I could take 6 out
Mhm.
of this trade. Let me see. Where is the okay? That's sell market 6. Oh, come on, man. What's this? Oh, okay. Okay, I know what's going on. Sell market. No, see. Yeah, it's because we're busy. I would have done that long time ago. See, I could sell market 6. Now I have 3, right?
Right.
Left. So I already took profit from 6. Now I have 3. So whatever they want to do, I will set my stop for 3 at the pivot point. So this is one of the reasons why I use most of these levels. So once they are able to break the pivot point, that's it.
Mhm.
I'm done with that trade. So this is it.
There you go. Okay. So that
Yeah.
becomes your stop and just let it decide what it
Yes.
wants to do.
Yeah. But if the market reverses and break the 4-hour level,
Mhm.
make a retest, then I move my stop from here to the 4-hour level. but the break has to be something like this.
A solid move, yeah. Some
Solid move
displacement, yeah.
and a retest, and that's it. So
Okay.
that's it. So this is one screen right here.
Hmm.
The other screen that I use is, can you see this?
No, I just have the main one.
Okay, let me see how I can share. Okay. I'm sorry, I'm not so used to.
That's okay. I think if you stop screen share and then screen share again, it'll let you pick which one. Oh, that was
Okay,
perfect timing. Look at that.
right here, can you see it?
There it is. Yeah. Uh-huh.
Okay. You were saying perfect time. What was that? Was that on the trade or what?
When you exited, it's
Oh, okay.
reversed from that almost exact spot.
Okay. So this right here is
Mhm.
trading view.
Yeah.
So on trading view, what I have right here is not different from what I have.
Hmm.
Sometimes I do like a duplication of those levels.
Hmm.
So at each point, whatever screen I'm looking at,
Hmm.
it's giving me like a view. Sometimes if I don't look at the third screen, the second screen is showing me exactly what the fourth screen is also showing me.
Hmm.
So that way, if I miss something, I catch it on one of the
Hmm.
moves. So right now, this is a normal trading view. And what I have here are just three indicators.
Hmm.
The one that makes much sense is the Lux Algo Smart Money Concept. This is it. It's free. It's a free indicator.
All
It's
right.
a Lux. See, Lux Algo Smart Money Concept. That's it right here. You could take a screenshot and then you.
I've actually got another Lux Algo that I use. So I'll pull up
Yeah.
this one. Yeah.
Oh, okay. Okay.
I'm
So,
making a note of it.
mhm.
Yeah.
So what I do in this one, when I go into the settings, is this. There are a whole bunch of things in here,
Mhm.
but what I only need here is strong and weak low, equal high, equal low, fair value gaps, and you see high and lows, just like what I have over there.
Right.
The daily low, the weekly low, and the monthly low.
Okay.
That's it. That's it.
Okay.
The premium discount zones doesn't really matter as long as it's not within my if it's not within my levels, I don't I don't really pay much attention to it. So what this is doing is on my um, Ninja Trader,
Hmm.
I have my 1 hour level, my 4 hour level, my daily level, right? So on my trading view, I have my daily level, my weekly level, and my monthly level. All I'm trying to do at these levels is just watch the reaction of the market at those levels to determine my bias. That's all those levels are for. So
Right.
the higher those levels are. So okay, let me show you this. The higher those levels are, the bigger they become. Look at this. When the market was dropping, right? We came all the way here. Do you see this?
Previous week high. Yeah.
Previous week high. And you see how the market reacted when we got there. I think they left like 83 to 77. That's like 5 points, right?
Yeah.
But guess what? I already have a level at 486.25.
Mhm.
You see?
Yeah.
So as the market was dropping, I'll pull my buy here, limit buy.
Mhm.
So the market never hit the previous week high, but hit my limit buy.
Right.
And because the previous week high is just 5 points away,
Right.
I feel protected.
Yeah.
When
Gotcha.
market gets here, there has got to be a reaction.
Sure.
Different from when you are using like a 30 minutes level and markets getting there, and especially on NQ,
Mhm.
they just slice through it like butter. So
Yeah.
that's it.
And what time frames are this? One of them looks like it's a 4 hour.
Okay. Okay. The one is 4 hour, one is 1 hour.
Okay. All right.
Especially with NQ, you trade using the higher time frame in focus is so sweet.
Mhm.
Yeah, so good, better than using the lower time frames.
Right.
Yeah, NQ respects the higher time frame, especially the 4 hour.
Mhm.
It respects it so much. So that's why I have the 4 hour and I also have the 1 hour.
Okay. And I mean, you can just see obviously these are rejecting those big bullish fair value gaps that are put up
Yes, yeah, you
yesterday.
see, you see it here.
Mhm.
So the market came all the way down here
Mhm.
and came back up here to test the fair value gap, and then the selling continues. So that's this fair value gap is just for observation purposes. The
Yeah, sure.
reason why, yeah, the 4 hour candle, if you are looking at the 4 hour candle from the beginning here,
Mhm.
you get a sense that the market is trying to retrace.
Right.
But when you look at the 30 minutes and the 1 hour candle, it gives you a sense that they have been buying the market for 30 minutes.
Mhm.
And then you see the 1 hour candle right here. Yeah, that's a 1 hour of buying.
Right. Your
That kind of
buying is
show
red. Your up candles are red.
it's not regular candle.
Right.
It's not regular candle colors.
Okay.
Yes, it's not regular candle colors.
Okay.
Right now, even though the market is moving back up, right? The structure of the market is still negative.
Okay. I see. I gotcha. I gotcha. So it's
Yeah.
it's a bearish.
Like what, like you see, like what we have here, all the way down here, going up here. The moment you see the market flip into this color, right?
Yeah.
You're loading the boat.
Yeah. They're loading the boat.
So what normally happens around here
Mhm.
is you can still see the market can still go up here into this red candle and still come back down here.
Sure.
So there will be a lot of back and fill,
Mhm.
consolidation, up, in, up, in. If you don't want to get involved in all this and you're looking for a very straight long move,
Mhm.
you ignore whatever is happening here. The moment you see the market flip green,
Mhm.
blue, you get in.
Right.
You know you are safe, you know. Then the market just go all the way up.
Mhm. Nice.
Yeah. So this is the second. This is the second one. The third one in the system that I have is let me show you this. Okay, did I say share? Okay, no, don't worry. I can actually change this. Uh, so how do I minimize this page? Okay, hold on 1 second.
Mhm.
Okay, so let me go into here. This is the last of the trading system. So each of the system can be used individually. But I'm used to having
There we go.
multiple screens. So for me, it's much easier for me. For someone who can, be looking around, one of the system is okay, as they incorporate almost everything.
Right.
So this system right here is called Market Metrics. This is a paid indicator, but it's very cheap.
Okay.
I think it's about $97. So I could give you a link if you want it, because it's cheap. That's why I bought it.
Okay.
So what this system does, this is the 1 minute and this is the 2 minutes. What this system does is it gives buy and sell signals, right? But it also gives you an idea when there is a market shift from bearish to bullish. So right here you see there's a market shift here from the green background to the red background.
Right.
That's a market shift. So once there's a market shift, you're waiting for a signal. See, it gives.
Oh, it gives you the sell right there. Okay.
Yeah. It gives a sell signal right here. Guess what? I already have a level at 669.
Right.
That's the red line. So if there is a market shift from bullish to bearish, and there is a sell, and it's giving the sell on my level, on my initial bearish level.
Now it's confluence.
Then I buy. Then I sell.
Right. Yeah, I was gonna say don't buy there.
Yeah. Then I sell. And you can see the market came all the way down till here. And then, there's obviously a shift. You will have to ignore this. The reason is because the focus of the shift of the market is negative. And then, even though the background changed to green, there is no buy.
Right.
There's no buy signal, and there's no level here. So you're going to ignore it. See, the market flip back to short. There's also a sell. It came down right here. The background shifted to green. That's a market shift.
Get your buy signal.
There's a buy signal. And guess what? I already have a level here. This white line, that's one of my levels.
Right.
You can see it here. So if I see a buy on my level with a fair value gap, that's triple confluence right there.
Right.
I buy. And then that's it.
That's it.
That was the trade that you saw me in.
So that's the trade that you're in. Okay.
And then you see it went almost about 50 or 6. I don't know how many points. The trade is still in there. I don't know how long it is. Yeah, because the market is still going. But guess what? I took my 6 micros off, and then I have 3 micros to run.
Right.
So that's for this one.
Yeah.
There is what they also call from the system is an EMA. EMA color change.
Okay.
So you can see the background is green.
Yeah.
The EMA color is green. Right here, the background is red. The EMA color is red. So right now, if you get a sell right here, if you don't have other confluence,
you still have several.
You still have to wait.
Yeah.
For the EMA color change to flip from green to red.
Right.
You know, and then check it down there. I have the volume.
Yeah, look at that.
Yeah, I put the volume in there by myself. The volume is just the normal trading view volume.
Yeah.
Yeah. So if I'm in this trade, for example, now I'm in this trade short. All the confirmations that's giving me short, I'm in the short. I keep my eye on the volume. The volume goes from, let me make it bigger. You see, I got into the trade when the sell volume was still very low, right?
Right.
And as I get into the trade, the volume keep going higher and higher and higher. That gives me an assurance that there is more sellers coming into the market. And guess what? Boom.
Big
At
move.
market open,
Right.
biggest sell volume of the day comes in. And you see, it start going from the big, another big one, but it's lower than this one. Then the volume start going, the sell volume start going down and down and down and down and down. And then the moment I see the first buy, and the second one shows red, I stay in the trade.
Okay.
Until I can see what I can call multiple. You can see that there's multiple green candles here now. Multiple volume, buy volume. Then I get out of my trade.
Yeah, there you go.
Yeah. If I'm not in a trade, I want to play reversal.
Right.
This volume right here, very good. See, I see the volume started showing when the background was still red. So I'm going to wait. The moment the background turns green, I get into the trade.
Okay.
And I can take, but I don't play reversal. Because reversal can only give you 10 points, 5 points, 10 points, depending on what you want. So reversal right here can give you, this is 650 all the way to 704. That's still good. That's about 50 points or more. So that's how this works. You have to make sure that the background, the color in the background is, if you want to go bearish, color in the background has to be red.
Right.
The EMA has to be red. And then you have to wait for the signal.
Sure.
So those three has to count. But the moment you have a market go all the way down here, this amount of selling volume, the more you get deep into the sell, into the what do you call it? What I can call the bottom line.
Yeah.
Then you want to ignore the sell signals.
Right, because that's you've already
It's like the sellers have had more than enough.
Right.
So what you'll be looking to switch for a market switch. And that's exactly what happened here.
Especially if you've got a level and
yes, that's what happened here. You can see this right here can go all the way. All the way.
Nice.
So with this one, you see this line right here, I put it by myself.
Yeah.
And you can see that it worked. It was an experiment that I did. And it actually worked out from the video that I watched from a YouTuber.
Okay.
Yeah. So what I did, let me take it out. So that way I could show you how I did it. So this right here, we have the previous day high and the previous day low. So I go in here and get my Fibonacci retracement. I put it at the previous day high all the way to the previous day low, right? Then I come in here and grab my box. Where's my box? This is my box right here. And I put it at the 70, what do you call it? 78.6 all the way to 62. Did you see that? That's it. I flip, then I go ahead and flip my Fibonacci retracement.
So you do it both ways.